Good morning, Bay Area. This is your Bay Area mortgage planner, John Payne, with the RateWatch Now daily update report. Quite a bit of information, so let's go ahead and jump in. This is the chart of the mortgage-backed securities market yesterday. See, a bit of a rally going on here. Pretty nice. I've seen rates drop because of this rally yesterday. What's going to cause rates to go up today? We have supply concerns. And not so much of a concern. I think the concern is that it's $35 billion. Pretty big number that's being auctioned off today. Case-Shiller is out. And it is actually up 3.2%. Now, 40 cities were surveyed, and half of them were up. San Francisco was leading the way with 11.2% increase in home prices. It's good news for the Bay Area. Rates go down. Home prices were less than last period. So although we were up 3.2% overall, home prices were down because last period they were up 4.5%. This period they were only up to 3.2%. So we have a downward trend. And a lot of economists are saying that trend will probably continue. Ireland, there's concerns in Ireland, so much so that the S&P is going to downgrade their rating. And consumer confidence, listen, was that a toilet I heard flushing? Because consumer confidence is in the toilet. It is the lowest point in the last 16 years. Also, the 2-year auction went great yesterday, which is kind of taking off some of the concerns over the auction, the 5-year auction that's going to happen today. Here is a shot of consumer confidence. This is why I'm saying that it's in the toilet. Lowest in 16 years. We need to be at a 90 in order to have growth, a 90 or better. And we're down, this is not even fully updated, we're down to about 48. So you can see that this line will shoot down to about here. So we're not doing very well at all in consumer confidence. This is how the market has been so far this morning. We're still on the upward trend. I think this is going to taper off, though, as the day goes on because we do have GDP coming out tomorrow, and I don't think that a lot of investors are going to take unnecessary risks. 27 lenders so far this morning have repriced for the better by 17 basis points. Here's what the chart looks like. Remember yesterday I said that I thought that we would actually break out of this trend line. Now we've actually gone up and we've tested the top of the trading range, and we are now, I think we'll probably come down and test this trend line, although maybe not today. It probably will be today. I think we may come down and test it in anticipation of the GDP number coming out tomorrow. On a longer term, you can see we have the arrowhead. We've actually broke above this arrowhead, which is good for now. And remember I said that we're going to be in between this 102.20 and 103.3 range, and we're at the upper end of that. I do believe that we're going to go test it, not today, but I believe that if the auction goes well today, we could very well test this top if we have a fabulous 5-year auction, which is very possible. But again, I think there's going to be a lot of hesitation due to the GDP number coming out tomorrow. In summary, Ireland may be downgraded by the S&P. Consumer confidence, it's just in the gutter. Home prices up, but less than last month. As expected, we have hit the top of the trading range. Is this news enough for us to break out? If so, we could be looking at 103.6, and that will start putting the 3% back on the high 3% mortgage rates back on the charts. Most likely we'll drift, though, while we're waiting for the GDP number. That's what my gut's telling me. In the 5-year auction, we'll decide what direction we will head into tomorrow prior to the number. GDP, that is. That's all I have for you today, Bay Area. Make it a great Tuesday. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.